members, bring to notice that the today's session is very unique. It's a subject on independence, threats, and safeguards under ICAI Code of Ethics. ICAI Code of Ethics is addressing by the person sitting at London. Kindly note that the person sitting at London and the non-chartered accountant is going to address, and he is practicing our profession. It is very proud moment for the all the members. So I on whole all behalf of all the viewers of this live webcast and on behalf of managing committee members of Bangalore branch, I wholeheartedly welcome Mr. Sairam Natarajan for this program.
Thank you so much, sir.
Members, I bring to notice that as head office is changed the guidelines, we have to conduct only 10 VCM per month. So June month, it is on first VCM we are conducting, and tomorrow and day after tomorrow also we are conducting the VCMs, and next week 3, and the last week of the June we are conducting 4 webinars. In total 10 webinars we are conducting from the Bangalore branch. So whatever the restrictions given by head office, we are there to follow, and we are following the today's program, the very unique program. Members, kindly view this program and expertise person addressing from our own member from London. So I request my friend C.S. Srinivas, the secretary, to kindly introduce Mr. Sairam Natarajan to our members.
Thank you, Chairman. Coming out each time with the new vachanas, it's good to listen your vachanas. Thank you. And it is an honor and pleasure to have Mr. Sairam Natarajan on today's webinar on independence, threats, and safeguards under ICAI Code of Ethics. I welcome you to this webinar, sir.
Thank you so much,
and
sir.
I also welcome all the viewers and members of today's webinar. It is my pleasure to give a brief introduction about Sairam. He is a certified fraud examiner and IRM certified from London. Presently, he is attending this webinar from London. He is an ethics, governance, risk, and compliance professional at Deloitte, UK. He has an exceptional ability to connect organizational purpose, vision, and strategy effectively to build and enhance an appropriate ethics and compliance culture. He has more than 13 years of experience solving GRC challenges and positively influenced the culture of global professional services organizations in UK, India, and US. He is passionate about the role of ethics and compliance culture in ensuring organizations stay true to their purpose. He aspires to make ethics everyone's business within and outside the organization. When he is not at work, he volunteers with the charities helping them improve their GRC practices and speak on a wide range of topics focusing on ethics, risk, and human behavior. With this brief introduction, I once again wholeheartedly welcome to this webinar, sir. Over to you.
Thank you so much. Thank you so much, Srinivas, sir. Can I just share my screen? Can I share my slides? Is that okay?
Please.
Yeah, okay. Thank you. Is my screen visible to everyone?
Yes.
Okay, brilliant. Thank you so much. Thank you so much, Chairman, sir. Thank you so much, Secretary, sir. I think I'm very proud to be talking to your members. I'm very passionate about the role of ethics in how we operate in business and in the community. And the fact that I'm an engineer by qualification, but I ended up working with chartered accountants through KPMG and Deloitte. It is quite interesting journey. So I'm coming at it slightly from the outside, and I'm hoping to learn from all of you as much as I can share what I have learned in the last 14 years. So just to talk about some of the things that I would be covering today. The speaker introduction is done, so I'll skip that one. We will look at the fundamental principles and the conceptual framework which are at the heart of the Code of Ethics. We're going to look at what is independence in principle. What does it mean? How can we manage perceptions about independence? How can we exercise professional judgment, and how can we evidence that we are exercising professional judgment? there is a concept of reasonable and informed third-party test that the ICAI Code of Ethics has introduced at the back of the ISBA Code of Ethics. That's a very interesting concept. Again, the same thing is happening both in the UK as well as in the US as well. So I'm going to share a little bit around that. Then we will, this is at the foundation of doing independence threats and safeguards. And therefore, I will perhaps take one or two questions at this point to understand if there are any foundational comments or points. And then we move to the different kinds of independence threats. How can we address those independence threats? We can look at a couple of case studies if we have the time, because that will be quite interesting. It will hopefully bring some of the independence threats to life when we are looking at these case studies. And then I will close this this talk with some things to think about as each of you go back to serving your clients and serving your communities. I think I will leave you with some thoughts to think about, and perhaps we can pick it up in future if you have any thoughts on that. So I will move on from the speaker introduction. So fundamental principles and conceptual framework. Now this is quite at the heart of ICAI Code of Ethics, and this is leveraging from the ISBA Code of Ethics. What it means is that in the absence of these principles, you are perhaps not going to be able to comply with the requirements of being a chartered accountant in India or elsewhere in the world. So what are these principles? These are fairly simple and straightforward to understand. So the first one is integrity, which is nothing but being honest. I think all of us try to be honest, both in life and at work. But this is challenging us to be better at that and making sure that at every opportunity, at every interaction that we have with our clients, with the regulator, with the institute, with our employees, we are being as straightforward and as honest as possible. The second principle is objectivity, which is basically being free from any kind of bias, any kind of influence, which is undue, or any kind of conflicts of interest. And this is where the most important thing is not just being objective, but also appearing to be objective. And we'll come to that slightly in the later part of the talk, where I talk about the reasonable and informed third-party test. But objectivity is not just of yourself, but how an outside person could see you. The third principle is around professional competence and due care. This is basically nothing but having the right level of professional knowledge and skills that are necessary for you to service your clients appropriately. So these kind of CPE sessions, any other CPE sessions that you attend, any additional qualifications, certifications that you obtain, which help you serve your clients better, are addressing directly this particular principle from the fundamental principles and conceptual framework. The fourth one is confidentiality. This is basically around the information that you hold of your clients, both from a financial perspective and as well, perhaps personal information as well, making sure that you are not disclosing that unduly to any third party unless you have obtained specific consents from your client, unless there is a specific legal requirement or a business need to do so. And just to give you an example, there is a story here that I am in the process of incorporating an LLP right now in India, and one of the CA firms, I will not mention who, one of the CA firms that I was interacting with, I just was talking to them and trying to find out what their policies and procedures are around making sure that my Aadhaar data and my passport data and my PAN data is not, by mistake shared with people who shouldn't have access to it. And they didn't have a lot to offer. They were like, no, this is how we do it, and no, there is nothing to worry. So as a client, I did not get a lot of comfort that my personally identifiable information, which can be stolen or misused, was going to be protected and dealt with in a confidential basis. So I chose to not go with that CA firm. I went with a different CA firm. So just being mindful of when you're dealing with clients' information, just making sure that you have the controls and the procedures in place to treat them properly. And the last sort of fundamental principle is around professional behavior. Now, there are two elements to it. One is compliance with laws and regulations. This is the legal aspect of it. And then there is avoiding actions that discredit the profession. The profession is a very important profession. It serves a very big public interest activity, and it helps the businesses and the capital markets thrive and contributes positively to the growth of economy. So therefore, any individual actions that discredit the profession can impair the whole economic engine of any particular country, and therefore we must at all costs avoid those actions that discredit the profession. So this bit is more around the ethics component, and not just the code of ethics, but it is also around being respectful about when you interact with your clients, being respectful when you interact with your employees. So this goes beyond the pure letter of the law, compliance with laws and regulations, etc. This is the inverted commas, what is the right thing to do in any situation. So those are the fundamental principles which form the backbone of the ICAI Code of Ethics, and at the back of which we can build upon the concepts of independence, threats, and safeguards. Now, what is independence? The ICAI Code of Ethics basically explains independence in two parts. The first part is independence of mind, which basically means that there is no situation or no fact pattern that could influence or compromise your professional judgment. Basically, you are free from all kinds of biases, you're free from all kind of influences, and you're able to act with integrity, with objectivity, and you are able to have professional skepticism in everything that you're doing for your clients. This is your own situation. This is being free from all kind of biases. The second one is independence in appearance, which is basically avoiding any significant facts or circumstances which a third party, and they say informed and reasonable third party, could look at and say, with a view to these kind of facts and circumstances, I don't think this particular accountant is acting objectively, or I don't think they are exercising appropriate levels of professional skepticism. So it is almost being empathetic towards a third party's point of view. Now, who might this third party be? We will talk about it a little bit later in the slide. But simply put, it could be an investor. If you're looking at listed companies, etc., it could be from the point of view of an institute. So when you're looking at a particular scenario and you're thinking about what is the best course of action, asking that question about what will the institute expect me to do in this kind of situation? If I do this, how will the institute perceive it? It's having those kind of questions, when you're making significant decisions about your clients and about your operations. So there are two elements, and whenever you're looking at independence, you have to look at both independence of mind as well as independence in appearance. Now, let's look at this very sort of simple example of, and a slightly funny example of how independence comes to life when we are working in an audit firm. Now, they are talking about observing the internal controls and providing some sort of assurance perhaps on the internal controls, whilst also potentially designing or advising in respect of those internal controls. Now, without getting to the details, the options that any firm will have in this kind of a scenario are either you say the threats are too significant, I don't want to do anything about it, and walk away from it, in which case you stand to lose some business, which is not the right answer for you. The second option is you ignore all the independence threats that exist and you say yes to both pieces of work, in which case you are commercially benefiting, but that's not the right answer from an ICAI Code of Ethics point of view. The institute might take a bit of an exception to that kind of an approach. The regulator might take a bit of an exception to that kind of an approach, because you're expected to observe independence when you're performing your activities. So what is the middle ground then? The middle ground perhaps is looking at all the facts and circumstances and saying, there are threats that are manifesting themselves. Could we put some safeguards in place to reduce those threats to an acceptable level? And once we do that, then it is possible that the institute is happy, that the regulator is happy, that the client is happy, and you are happy as well. So and everybody's risks are managed, and you're still doing the right thing, and you're still doing business, and the client is getting what they want. So it is not about avoiding risks, because risks are important, but it is about being aware of what the risks are, what the threats are, and putting appropriate mitigations and safeguards in place to make sure that you are able to say yes to the business. That's just a very small example, I thought, which we could talk about. How do you manage perceptions? I mentioned the reasonable and informed third party, which is again featured here. But basically, managing your independence in appearance is quite difficult, because what you're trying to do is you're trying to influence somebody else's perception or somebody else's view of what you have done, and that is very difficult to do. But there are some things that you can do to get yourself in a good, strong position. The first is exercising judgment and skepticism as a professional in all circumstances. So being questioning of a particular scenario. So a very quick example could be, if the client is giving you some information, then not blindly relying on that information, and just looking at, is there any inconsistency there? Are there any gaps there which you need to ask before delivering on a service, and going back to the client and asking for that information, which allows you to do your job properly. So that is an example of exercising professional judgment. The second piece is remaining alert to any changes to facts and circumstances. Now, this is again quite important, because I think more often than not, we are all quite good when we are at that client and engagement acceptance stage to look at what is happening, what are the different threats, what are the safeguards in place, and you say, yes, this is the right decision, there are appropriate safeguards in place. I think most of us are quite good at that stage. But 6 months down the line, a year down the line, maybe even 2 years down the line, something might change. For example, the shareholder pattern might change. The board of directors of the company might change. There might be a merger or acquisition that happens. The regulator might change their own rules, like ICAI is up, enhancing their code of ethics right now as we speak. So just remaining alert to those kind of changes and making sure that we are visiting our decisions every time that something changes. So it's not that the decision might change, but the decision should still be relevant in those kind of circumstances. So if the regulation is changing, then you're having a read of the regulation and making sure that that the services are still permissible. If the directors have changed, the shareholders have changed, just making sure that you don't have any relationship with the new directors or shareholders, which could create additional independence threats that you have not assessed previously. So it is making sure that that you're considering everything on an ongoing basis, on a periodic basis. And the last one is that reasonable and informed third-party test. Now, this is where an informed investor, institute, or a regulator's point of view, or sometimes even an independent ethics expert's point of view becomes quite important, because when you are making decisions, the reasonable thing to say for a person who's not very close to the business is to say, all the decisions that you're making are in your best interest and in your commercial interest. But is that in compliance with the code of ethics or not? They might say maybe not, because you are always acting in your own interest and for your own benefit. So having that third party view, having that third party input into the decision making process sometimes is quite helpful. You don't have to do it for everything, but where you have significant pieces of work, or where you have a tricky scenario, a difficult client, having that third party view is quite important. The last bit that I would say is around documenting these kind of aspects. So how have you exercised skepticism? What kind of changes have happened, and how did that influence the decisions that you've made? And have you assessed it from a third-party point of view? The documentation of this was already there in the 2009 version of the ICAI code, but in the 2019 code, the requirements of the documentation is covered in more detail, which basically is taking us very close to that audit principle, which most of you might know it better than I do, because I'm not a chartered accountant. But there's a principle which says not documented is not done. So it is great to think about these things, but if you have not put it on a piece of paper to say this is what we have done to arrive at this particular decision, then 6 months down the line, a year down the line, those decisions can be challenged if it comes to that. So being mindful of documentation is quite important. Excuse me. So how can you exercise professional judgment? Now, exercising professional judgment is something that is part of the fundamental principles and applies to all facets of being a chartered accountant. It applies to all facets of the work that you do, but I'm going to talk about it from an independence perspective. Now, one of the things that you might consider when you are exercising professional judgment is whether any relevant facts and circumstances are missing, which are important, or which you should be aware of before making a decision. A very quick example could be when you are at that decision point of understanding whether you are independent of a particular client or not. Just being aware of all the work that you do for that client, just being aware of all the financial relationships or the personal relationships that your partners in the firm, the employees in your firm have with that client. Just being aware of that puts you in a better place to make a professional judgment. If you don't know that information, then the quality of the judgment or the decision that you're making is getting a little bit impaired. The next point to consider perhaps is the inconsistency between what is known to you and what is perhaps known to the client. This is coming from a real life example where there was a scenario where a particular matter was pending at the tax tribunal level, and the client was expecting the accountant to represent the client in front of the tribunal, whereas the accountant believed because it's an assurance client, they couldn't represent it in front of the tribunal. And there was an inconsistency between the client's expectation and the accountant's ability to deliver services. And because neither party chose to speak about it, it ended up being in a very difficult scenario, and it had to be resolved through other channels. But if there are inconsistencies, it is always useful to sit down across the table, pick up the phone. In the current coronavirus situation, perhaps not sit down across the table, but maybe do a Skype call or something and explain it to the client, and just agree on what the expectations are. The other matter to consider when you're making professional judgments is there a need to consult with others who may have any specialist experience, expertise, or skills? Going back to the previous example where I talked about, if you have any significant client where you're making independence decisions, or if you have a very tricky scenario, a very difficult client who's threatening to either walk away or is not willing to pay the fees, etc. And if it is a difficult decision, then you can perhaps think about, should you consult with another partner in your firm? Should you consult with the institute? Should you consult with an external ethics professional? I mean, these are things that you can think about, because it is better to reach out to the institute, for example, beforehand and understand from them what course of action they will expect you to take, than for you to do what you believe is right, and at a later point in time, the institute takes a bit of exception to that decision. So it's being proactive, being aware that other people might look at that situation slightly differently, and accessing all sort of support that you may have available to make sure that you reach the right decision point. The next point of consideration could be, are there any biases that you yourself have which could impair your professional judgment, or which could be perceived as having impaired your professional judgment? And an example is very simple, which is if you have an investment in an assurance client, then even if you are completely objective in your view, a third party might say that because you're invested in that particular client, you would want to sign off on a strong balance sheet, because a strong balance sheet would increase the share prices, and those increased share prices are directly benefiting you. So there is a self-serving need there for you to sign off on a strong balance sheet, and therefore there is a perception of self-interest there. So what you can manage those scenarios, but it's just being aware of what biases do you yourself have, which might impair your decision-making process, or which could be perceived as having impaired your decision-making process. And the last one is it possible that a third party might reach a different conclusion than you have? And this is, I keep saying this, putting yourself in the shoes of an investor, putting yourself in the shoes of the institute or of the regulator, to think about how will they look at this particular scenario, how will they look at this particular decision, having that open mindset. And if you use that approach along with using a different partner in your firm or an external professional to get their views as well, you are in a better place to reach a better decision than perhaps you could make on your own. So it's when you're exercising professional judgment, there's a lot of subjectivity, but there are a lot of factors at play that you can influence, such that you are in a better place than you would have been previously. This is a whole topic in itself, and to be honest, we can spend 2 hours talking just about a reasonable and what is a reasonable and informed third party. How do you assess a reasonable and informed third party test? Just to give you a bit of a background, I hope that is helpful, that in the UK as well, in the FRC ethical standards, which is the equivalent of the ICAI Code of Ethics, they have introduced a similar concept called objective, reasonable, and informed third party test. And the whole profession in the UK is still, as we speak, in a bit of a debate about what that means. How do you get a third party's view in your own decision-making process without, for instance, breaching the confidentiality issue? So if you're reaching out to an external consultant, then you have to maintain that balance between getting a third party view and complying with the fundamental principle of confidentiality. So there is a big debate and movement happening in the UK. A similar thing is happening in the US, in the PCAOB world as well, and India is no different. But simply put, it is basically a consideration of whether a third party who has access to all the information that you have, or who has access to information that you would be expected to have, whether they are likely to reach a different conclusion or a different point of view than you have. It is as simple as that. So in a human behavior point of view, this is empathy. This is just putting yourself in somebody else's shoes and looking at the situation from their point of view. But from a compliance perspective, what that means is that you are not making all your decisions on your own. Following perhaps a risk-based approach, maybe where you have tricky scenarios, where you have higher fees, where you have a difficult client. In at least some situations, you're making sure that you're not making decisions on your own. You're reaching out to people within your firm. You're reaching out to people outside your firm who have a knowledge and understanding of the industry, and making sure that you're getting their views as well before you decide on a course of action, before you decide what to do one way or the other. So it's fundamentally that. It is a whole school and a whole chapter about how do you bring this on board, when do you bring this on board. But and I know a lot of the members would be working in different sort of scales and sizes of firms. So there is no one size fits all answer. But what I will perhaps leave you with is no matter what size of operations you are in, having a risk-based view of how can you apply a reasonably informed third-party test. Maybe start with your largest 1% or 2% assurance clients, and look at how you can get another view with regard to independence decisions that you're making on those clients. So it's not all your clients, but at least your top 1%, top 2%, or your top 5 clients, and making sure that you are getting a different view. You are allowing for somebody else to come in and challenge the way you are approaching things, somebody else to come in and look at the documentation that you've done with regard to that particular client, and offer a bit of a challenge or an outside view. So maybe that's a starting point. Each firm, each individual will be slightly different in how they approach this, but starting to think in that direction would be quite beneficial for all of us. I think we are at a logical break here. What I would like to do is maybe take a couple of questions around the foundational stuff, if that's okay, because what we've just covered is the foundational stuff. And if we don't get that right, we cannot understand independence threats and the safeguards that need to put in place. So Nikhil, are there any questions that have come up so far at all?
Sir, normally what we'll do is we'll take questions in last.
Okay. Thank you so much, Corey sir. Sorry, I will take the questions in last. That's fine. That's fine. So I will carry on then. I do hope that if you have the questions, you can leave them and we can pick it up at the end of the session. Now, what are the different kinds of threats to independence? Typically, the ICAI Code of Ethics have defined 5 different threats to independence. These are self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. What is important to bear in mind is that any scenario that you're looking at, any particular situation, could have more than one kind of independence threat inherent to that situation. It is also possible that there are some things that have happened in the past which also create some kind of a threat to independence that bears upon the decision at that point in time. Let me give you an example. So if you're looking at a particular assurance client and you're looking at whether or not, based on the facts and circumstances known to you, you are independent or not, you're not just looking at what is happening at that point in time. If 6 months down the line, the client refused to pay the fees for some services, or if they threatened to cut down on the engagement that they have with you, or if they had some very difficult conversations with you which impair the level of candor and trust that is required between you and your clients, then that bears upon your decision as well. So it's not just at that point in time, it is what is happening in the past, and it is also perhaps looking at what could happen in the future and having that whole picture, the 360-degree view of independence. That is quite important. And if you just break it down into each one and address each one of them, maybe that might not be the best way to go forward, especially with regard to large clients and large complicated scenarios. Let's look at them one by one. What is self-interest threat? It is basically a threat that any financial interest or other interest or any personal relationship will inappropriately influence your judgment or your behavior. I've included an example which talks about if you're receiving a lot of non-audit work and non-audit fees from a particular client who is also an assurance client, then there is a possibility that your ability to be objective is impaired, or at least that from an objective and reasonable informed third party's view, there is a perception that your objectivity has been impaired or influenced. So it is having that mindset of looking at, am I independent or not? Am I free from bias? Am I free from undue influence or not? If yes, will an objective and reasonable informed third party view it the same way? The second threat is self-review threat. Now, this is in very simple terms. I remember very, very long time back when I started my career at Ernst & Young, my boss explained this to me in simple words, which I have never forgotten, which is marking your own homework. And this is exactly that. So if you are, for example, preparing the books of a particular client and then later providing an assurance on the same books that you have prepared, which is very similar to marking your own homework, then that creates self-review threats. Now, that extent of self-review threat perhaps cannot be safeguarded against, but irrespective, self-review threats can manifest themselves in different ways. the other example in a assurance space would be going back to that comic strip that I had shared. So if you're designing or implementing any kind of controls at a particular client, then it will be a little bit difficult for you to also provide assurance on the same controls that have been implemented, because there is an understanding that you will not find faults with things that you have done. And even if you are operating objectively, somebody else might disagree with that position or that outcome. So that is self-review threat. Advocacy threat is nothing but advocating or promoting the interests of your client in front of a third party. Now, these can manifest themselves in many ways. In a tax matter, it can be where a particular tax matter is in dispute at the ITA level or at the tribunal level, and you are supporting them in responding to the authorities or the tribunal, or even representing the client in front of the authority or the tribunal. That's where advocacy threat can manifest itself. In addition, other examples could be where if you're supporting your client in a particular transaction, so due diligence kind of engagements, and if you're involved in negotiations, then there could be a perception that you are promoting the interests of your client, you're advocating the interests of your client in front of third parties. So in those kind of scenarios as well, advocacy threats exist. Familiarity threat is nothing but the possibility that you are too close to your client, either by way of long association, or by way of any personal relationships, or by way of any family relationships, etc. So a simple example that is included in this slide is where if you are auditing the same client for many years, then there is a perception that you would have become very close, you would have become good friends, perhaps. That is very human and very normal to do. And if you've become a friend, if you've become too close, then there is a perception that you will not be able to exercise professional judgment and skepticism in your audit work. Even if you're doing so, again, applying the objective and reasonable third-party test, it is possible that somebody might say, oh, you guys know each other for 20 years, you are best of friends, you visit each other every so often. So I'm not sure if you have objectively looked at the books that they have prepared. Similarly, having close relationships, so where you have a scenario, and we'll look at one of the case studies at the back end of the slides, where you have a scenario where perhaps your spouse is related to the finance director or the CFO of the company that you're auditing. Then that is too close. That is familial relationships, and there are familiarity threats there. Whether they can be safeguarded against or not, that would depend on the specific nature of facts and circumstances. But you cannot ignore the fact that your spouse, so your husband or wife, is a brother or a sister to the CFO of the company where you are providing assurance, and you cannot overlook that fact. So being aware of those kind of relationships is quite important. And the last one is intimidation threat. Now, this is where you may be deterred from acting objectively because of either actual pressures or perceived pressures from the client. I mentioned a couple of times previously around where if the client refuses to pay, or if the client refuses to pull back on the work that they've been giving you, or if the client threatens to sue you or report you to the ICAI disciplinary committee and things like that, then those are matters which could cause intimidation threat. And again, it is not something that we can we can safeguard against those kind of threats, but being aware of those kind of situations and making sure that you're putting appropriate safeguards in place is quite important. What are the factors that are relevant in your evaluation of the level of threats to your independence? There are two kind of buckets I would talk about. The first is the specific factors which matter to the client and the engagement that you're looking at, whether the client is a public interest entity client or not. Now, public interest entity is a defined term in the ICAI Code of Ethics. It is basically all listed entities to start with, and if you or your firm do any kind of audit or assurance work for any PIs, as they are called, public interest entities or PIs, then there are increased risk of independence, and therefore you have to be more careful when you are approaching those kind of clients and engagements for those kind of clients. Then you are looking at all kinds of qualitative and quantitative factors. For example, what is the nature of the proposed work? What is the kind of fee arrangement? Is it fixed fee? Is it contingent fee? Is it recurring? Is it one-off? Have they are the fees at the appropriate level for the services that they're asking, or are they refusing to pay the right level of fees? There are many things around both the qualitative and the quantitative factors that go into assessing whether independent threats exist. And the last one is the cumulative effect or the combined effect of the different threats to independence. So this is not just looking at, okay, self-review exists, and therefore I will put these safeguards in place and deal with that. Familiarity threat exists, and I will put these safeguards in place, and this is how I will deal with it. And you could be able to deal with each one of them, but in these kind of instances, 2 and 2 does not necessarily add up to 4. 2 and 2 can sometimes be 5. The cumulative effect of the independence threats could cause an objective and reasonable informed third party to think that your independence may be at risk. So therefore, just having that mindset of not just looking at each individual independence threat in isolation, but looking at it cumulatively, holistically, that is quite important as well. One question that I want to leave you with, not one to answer right now, but just for you to think about and maybe take away at the back of the session, is the ICAI Code of Ethics says that you could treat other clients or certain categories of clients as public interest entities in addition to the listed entities, which is a defined term. Now, question is whether you in your respective firms have agreed internally to treat certain entities or categories of entities as PIs or not. And there is no right or wrong answer, but the point is thinking about that and documenting why you have done so or why you have not done so will perhaps put you in a good place, should the institute at some point in time come in and ask about these things. The second set of factors that are relevant are your general factors. Now, these are systemic factors. These are inherent. This is not engagement specific. This is not client specific, but this is applicable to all clients and all engagements. And perhaps the source of these is your own operations, your own firm, your own practices. So what level of corporate governance procedures exist both within your firm as well as at the client? So do the board of directors, also called those charged with governance, execute their roles and responsibilities appropriately or not? If not, are we pushing them and are we nudging them to do so? Those kind of things become very important. What kind of educational training and experience is there of the professionals in your firm? So do the professionals have the right level of skills? Are they provided with CPE opportunities? Are they provided learning and development opportunities? It's being mindful of those kind of things to make sure that you're complying with, if I want to connect back to the conceptual framework of professional competence and due care. This is quite important. Then you're coming to having effective complaint systems, which enable both yourself, the firm, as well as the public and the clients to draw attention to unethical behaviors. Now, I know that some of the larger firms may have implemented or may think about implementing an ethics hotline for their own firm. So, which gives the opportunity to all their employees, all their clients, all their suppliers and vendors to draw the firm's attention to any kind of unethical behavior that they might be observing on an anonymous basis. And if you are doing that, then that's great. And if you're not doing that, then maybe you need to think about it, because in the absence of that, the regulator or the institute might might question the governance systems that exist in your firm. And the last one is, what are your internal monitoring and disciplinary procedures? So where you have instances of non-compliance, where you have instances of infractions, what how do you deal with them in your firm? Is there a fair way of dealing with them? Is there a committee that looks at it? Is there a team that looks at it? Are there is there a consistent approach to instances of non-compliance, unethical behavior within your firm? And I'm not talking at the institute level. I'm talking within your firms. That often contributes to the level of threats to independence as well. And the last one, which I apologize, I have not included in this, is perhaps looking at what level of monitoring happens in your firm. So how often do you look at the work you have done, or the policies and the controls that you have in place, and see if things are working as they should, if things are working effectively, or if there are any loopholes in your own controls, if there are any flaws in the work that you've done, and how do you resolve those kind of issues? Do you need to have additional policies? Do you need to have additional controls? Do you need to have some education and awareness? Sometimes that is all that is required. You just need a bit of an awareness building exercise to remind everybody of doing something, and that fixes some small niggling issues. So the fifth element, which I've not which I've not included in this slide, is the ongoing monitoring and testing of your procedures. We briefly talked about being aware of changes to facts and circumstances and how these might impact the level of threats to independence. And it is quite important for us to revisit the decisions that we have made. Generally, a good practice is to do it at least every 12 months, especially for long-standing clients. So every 12 months, just going back to the drawing board, looking at the work that you do for the client, looking at the relationships that your partners, your firm, your employees have with the client, and thinking about, has something changed? And if something has changed, does that impact the level of independence threat that we had assessed 12 months back? And if yes, what about any additional safeguards that we need to put in place to make sure that the independence threats are an acceptable level? So it is being mindful of the fact that things change. We are, in the risk world, we always talk about a world which is volatile, uncertain, complex, and things are always changing. And if we don't factor those things in our decisions, if we don't take those things in, then it is possible that inadvertently we end up in a situation where we have a non-compliance, where we have a violation of the code of ethics, and that just puts us in a very difficult position, because people will start asking questions and we have to answer, and that's not a great experience. So it's just there's a small cartoon strip as well which talks about in a funny way, it says the regulations are changing and we'll find a new way to get around them. Obviously we don't do that in practice. It's a cartoon, it's a funny way to say it, but when new regulations do come in, I think it's quite important for us to step back and think about, what do we need to do within our firms, within our practices, to make sure that we continue to be compliant with the code of ethics. And now is a very good time, because we are in a bit of there's a new code of ethics that's coming. We are in a bit of a slowdown. There's not that much activity that is happening. So maybe we have the time to sit back a little bit, look at the bigger picture, and see what can we do differently. How can we improve the independence controls, policies, procedures, etc. within your respective practices. As I said, we have to look at independence threats holistically. We can't look at it individually. And this is just giving you some of the flavors from where independence threats can manifest themselves. So financial relationships, both of your firm as well as of your partners and employees, where you're invested in a particular company and you're auditing that company, or if you have any kind of a lending relationship, any kind of a overdraft facility. Those kind of things are quite important and have a bearing on the overall independence assessment. Any kind of business relationships. So if you have, and I'm sure most firms will have vendors, suppliers. Many firms will have some partners who they go to market with. So if there's an IT startup that you're working with, and you're coming up with a tax technology product that you want to offer to your clients together, then just being mindful that you are not also auditing that IT startup, and if you are, then making sure that the relevant safeguards are in place to manage the independence threats. So it's making sure that you're not just looking at your clients, but you're also looking at your vendors and suppliers. Then the most common and obvious one is the non-audit services. So any kind of tax work, IT implementation, systems implementation work, any kind of transfer pricing related activity, any due diligence. A lot of our members will also be involved in disputes and investigative type services. So being mindful of the different kind of services and the different kind of independence threats that manifest themselves from each of those services. The next one is an interesting one around gifts and entertainment. Now, obviously, as you work with your clients, as you build relationships, which are quite important, especially from an audit point of view, you have to build a relationship of trust and candor so that you can rely on the information that the company is providing you, and you can apply your skills and judgment to sign off on the balance sheet. But when that relationship matures to a point where you start receiving excessive gifts, you start receiving excessive hospitalities. For example, taking a CFO, or the CFO taking you to a sporting event or to a music festival, or to a big 5-star restaurant for dinner even. I think just being mindful of the fact that they can subconsciously influence your decision-making process, but also they can definitely influence the view of a reasonable and informed third party in how they look at you and your objectivity and your ability to be skeptical in performing your duties. The next one is around auditor rotation and partner rotation. So this is, we briefly mentioned, we talked about this in the previous slides, where if you have a very long association with a particular client, then that has its own inherent threats to independence, which we need to be mindful of. And it's not just the partner, it could be employees as well. So just being mindful of that. The next one is employment relationships, which is quite related to the previous one. So I always think of our community of the CA community as somebody, especially if some of the members are from Big Four. I mean, they know that we move around quite a bit, but it's a very small world. It's not a very big world. So you could be in a CA firm tomorrow. You are working for the business as a finance director or as a CFO, or alternatively vice versa. You are working as a finance director, CFO, or managing a company's operations, and then you start your own practice or you join a firm as an auditor. And those things happen all the time, and they are quite important, because exchange of knowledge, exchange of information is quite important, both for the practice as well as for the industry. But when that happens, that creates its own set of independence threats, and we need to be mindful of those kind of instances. We need to be careful that we are not overlooking them or ignoring them. The next one is any kind of actual or threatened litigation. So where the client starts, saying, I will sue you if you don't do this work for this much money, or you didn't do this work properly, and I will sue you, or I will report you to the institute, blah, blah, blah. Those are difficult scenarios, and those are scenarios where perhaps you're not having a conversation in good faith with the client. The conversation is in bad faith, and that's where your independence and objectivity could be impaired, or could be perceived as having been impaired. And the last one is fee-related matters. So this relates to the level of fees, the nature of fee arrangement. So fixed fee versus time and materials versus contingent fee arrangement. This also talks about any kind of overdue fees, long pending matters where they have not paid the fees that are rightfully yours, etc. And all of those feed into into your independence threat assessment. So it sounds very big and it sounds very daunting, but actually, if you just step back and think about it, there are largely two ways to go. So if you're a small firm and a small practice and you have a limited number of clients, then it is very easy to get this 360-degree view, and all you need to do is get that 360-degree view and put pen to paper and document what, based on your understanding and your awareness of the information, what are the independence threats, what are the safeguards, and we'll come to the safeguards. What are the safeguards that you've put in place, and how you're generally getting comfortable that your independence is not impaired. If you're a slightly larger firm, you can perhaps invest in some sort of a methodology, technology tool which allows you to track these things. Especially if you have multiple offices. If you have an office in Bangalore and maybe you have an office in a different part of the country, maybe Delhi or Bombay, then how do you make sure that the information that partners in, let's say, Bombay have with the information that partners in Bangalore have? And I think if you're a larger firm and if you're able to afford it, then perhaps thinking about any kind of tools and technologies, and it needn't be very expensive, but something as elementary as a Microsoft SharePoint, for instance, which tracks all of these relationships, will let you get that 360-degree view of the different factors and the different facets of independence threats. But not looking at these things cumulatively could put you in a situation where you are inadvertently, by mistake, in violation or non-compliance of Code of Ethics, and that's not a good situation to be in. Now, coming to this resolving part, I mean, that all sounds very daunting. How do you resolve or how do you mitigate the threats to independence? And this is quite simple, actually. I mean, it's not very complicated. The first thing that you could think about is eliminate the particular circumstance that is causing the independence threat to you. The second one is applying some sort of safeguards which can reduce the independence threats to an acceptable level. And the last one is just denying to accept or declining the professional activity that is causing trouble. So really, it's quite simplistic. And I've included some examples of these safeguards. These are in no way exhaustive. These are in no way conclusive. It all depends on facts and circumstances, but these are examples. So if I'm looking at eliminating the circumstance, for instance, if we spoke about an example where if you have shares in a particular company and you would like to audit that company as well, then a very simple thing to do is to dispose of the financial interest, dispose of the shares, or gift it away to somebody who's not involved in your practice and who's not closely related to you. And therefore, you can not only be free from bias, you can also evidence that you are free from bias. Because you've eliminated that scenario which could have impaired your independence. There are partner rotation examples which could if there's a partner who's been associated with the same client for a very long time, you just rotate off that person. If you have multiple partners in your firm, you just change that partner, bring somebody else in, fresh pair of eyes. Does not have the same level of relationship with the client and therefore is in a better position to be objective and skeptical about the information that the client is providing. So the first part is eliminating the circumstances. The second piece, and this is quite detailed, is applying safeguards. Now, safeguards, the ones that I've included are the simple ones. Depending on individual cases, there might be more evolved safeguards as well. But the simple ones are just making sure that the partners who are involved in the audit are not the same partners or individuals who are providing the non-assurance, the non-audit service. That is very simple. And if possible, if you can prevent any kind of exchange of information between the two teams and the two partners, then that's great. Then they can evidence that they're free from bias because the service is being provided by the non-audit team, which is different to the audit team, which is being objective and which is applying principles of skepticism. The second example could be an external review of either the non-audit work or the audit work by either another partner within a firm or by an external person. And again, there is a cost element to it, but if there are big engagements that you are trying to address safeguards for, address independence threats for, and if there is a possibility to embed the cost back to the client, then costing for this to say, yes, there are independence threats, but we will be able to do this work for you if we can implement a safeguard by getting in another auditor to come in and just offer a different set of challenge, different pair of eyes on the work that we have done, and that will cost X rupees. And are you okay with it? And if the client says yes, then that's fine. And then you are able to evidence that it's not just your own opinion, it is the opinion of another person, and the views are concurring, and you can evidence objectivity that way. And the last one is making sure that the client management makes all the judgments and decisions. Again, this is quite a big piece around management services and management related services, which are generally prohibited for assurance and audit clients. But even for services that are deemed permissible, making sure that any kind of assumptions that you're making on behalf of the client, any kind of judgments that you're making on behalf of the client, are being reviewed by the client. A very easy example is where if you're preparing a tax return submission form for a client, for an assurance client, then and you look at the information and the tax form that's been prepared by the client, and you find some errors. Now, in client service mode, what we might want to do is we might want to change it for the client and then file it with the income tax authority. But the right thing to do, because it's an assurance client, and because we want to make sure that the management is making all the judgments, is to say, when you make that change, you either email the client or speak to the client and say, we were looking at the tax form that you prepared. We found these particular issues. We fixed it, but we fixed it taking this approach. Do you agree with this approach? And if they say yes, then once you've documented it, then you're continuing to show that the management is making all the judgments and decisions for their client, and therefore the independence threat is reduced to a large extent. And the last way of dealing or addressing with independence threats is just saying no to any kind of professional activity. So it could be a business relationship, for instance, a supplier or a vendor. It could be a non-audit engagement, or it could be declining an audit engagement. Now, if it's a new audit engagement, for instance, and if that non-audit that new audit client already has been doing a lot of work with you, and you would rather offer them non-audit services, because you're doing a lot of good work with them, from tax to due diligence to transactions. You're doing a lot of good work, you're getting a lot of money, and by bringing in this audit relationship, you are just creating more instances of having to comply with the code of ethics, and it is perhaps not in the best interest of the client and your firm to have both the audit and the non-audit relationship in the same firm. So you might go back to the client and say, listen, I love working with you. We've done great work together, and we'd like to continue working with you. But because of the independence threats, we recommend that you go to another firm for the audit work, because that's a small piece of work. We'll continue to do the large pieces of work around tax and around systems and whatever else that you do. And that's an easy conversation. The client, I'm hoping, will understand that as well. And you might end up losing a little bit of money, but what that means is you have reduced the time and the effort and the cost behind independence compliance with respect to that client and with respect to that engagement, by just saying no to a 10,000, 15,000 rupees piece of work. And sometimes those are difficult decisions. Other times they are relatively easy, but that's one way to deal with or address independence threats. Just a reminder again that the examples that I've listed here are not conclusive in any way and not exhaustive in any way. This is just indicative. So when you're looking at your own specific circumstances, be mindful that these may not be sufficient. This is a very simple process flow of how you might get to a point of assessing independence threats and also applying appropriate safeguards. And again, we will come to some more safeguards in the next few slides. So the first thing is to consider all the relevant facts and circumstances for that proposed engagement or for that proposed relationship. What is the nature of service? What is the level of fees? Who's asking for that service? What relationship do we have with them? Do we owe them money? Do they owe money to us? Have they been gifting us excessively? Have we been gifting them excessively? Is there a very long association with them? It's just considering all the facts and circumstances for that proposed engagement, and then in conjunction with the wider issues. Do your employees have any kind of personal relationships? Do your employees have any kind of financial relationships? And just looking at it holistically, just going back to the previous slide, the whole spectrum of the different sources of independence threats, and then you arrive at one position, which is your cumulative threats to independence. And that's that decision point where you have to ask yourself, and sometimes ask somebody else, either within your firm or outside your firm, as to, can we apply safeguards to reduce these cumulative threats to an acceptable level? And the answer to that is often binary. It's either yes or no. If the answer is no, then the right thing to do would be to decline the engagement, or perhaps, and for simplicity, I have not shown it in this decision tree, but perhaps if you don't want to decline the engagement, then eliminating the source of that independence threat. Remember, we spoke about the 3 ways of dealing with threats. So it's applying safeguards, declining the new piece of work, or eliminating the circumstance that's causing the independence threat. So you could easily eliminate that threat, and then at this stage, so when you evaluate cumulative threats after you have eliminated, the cumulative threats will come down to a reasonable level. But over here, if the answer then is yes, we can apply safeguards to reduce the threats to an acceptable level, then you put those safeguards in place. That's the most important thing. But equally important is to document your cumulative assessment of threats. So document what you assessed here, document the effectiveness of safeguards as to, what are the safeguards that you've put in place, why are they effective, and then on that basis, then accept the engagement. And again, I'm not saying you need to do this for all engagements. You don't need to do this for all clients, because there is an element of time and effort cost involved as well. But you could, as I was saying earlier, you could start doing this for your top 3 or top 5 clients from a revenue perspective, and see how that goes. And hopefully, if you find value, you might be able to start doing it for some of your other clients as well. We're going to look at a couple of case studies. Now, this matter relates to a PI audit client, which is in scope for the NFRA. I don't know how many members who are joining this call involved in PI audits. PI stands for Public Interest Entity, just for everyone's benefit. I don't know how many firms are involved in PI audits, but this is more an academic conversation than anything else. So hopefully the principles would be useful. The services that are being proposed are with regard to conversion of financial statements so that they can converge with the IND AS standards. Then providing some advice and recommendations around opening balance sheet, some more advisory services, including in relation to preparation of financial statements. One other facet in this case study is that there is the partner, Miss ABC, and I've consciously taken the name out, is also involved in the audit engagement. So this is a partner who's proposing on doing non-audit work, but they are also involved in the audit engagement. What are the independence issues in these kind of in this situation? The questions that you should be thinking about are: does the scope of work include any kind of design or implementation of any financial information systems? To what extent would the results of the work be reviewed as part of your audit work. So going back to that principle of, are you expected to, or will you be marking your own homework? Do the services fall in the purview of accounting and bookkeeping services? That's with regard to the services. Then would Miss ABC's involvement in the audit work as well as the non-audit work create any self-review or familiarity threat to independence? It's possible, but to what extent? We need to think about that. Has the service been approved by the audit committee? So if it's a public interest entity audit client, a PI audit client, they most likely have an audit committee, or they are at least required to have an audit committee. So have the audit committee exercised their own professional judgment and skepticism, and have they approved the services? And then finally, what is the cumulative assessment of threats to independence from the point of view of a reasonable and informed third party? Those are the questions that you should be thinking about. What are the independence threats to consider? So primarily, it gets distilled to self-review threat, because there is a possibility that the work that we are doing, the outputs, the results, the deliverables could be subject to audit procedures. And the second one is familiarity, especially from the point of view of Ms. ABC's involvement, both on the audit as well as on the non-audit side. Now, how can you safeguard against these independence threats? Just a reminder, many of you might already know it, but as a reminder, for public interest audit clients, public interest entity audit clients, any services which are in the nature of design and implementation of financial systems is a prohibited activity. The independence threats are too significant to be safeguarded against, and therefore no safeguards can be put in place. So if the answer to the first question is yes, this particular first question, which is, does the engagement involve design and implementation of financial information systems? If the answer to this is yes, then the rest of the exercise is not necessary, because the answer, then you say that it's a prohibited activity and we can't do this piece of work unless we resign from the audit and then we choose to do this non-audit piece of work. But if the answer to that is no, then we have to look at other threats and what safeguards might be necessary. So then we start looking at familiarity threat. Could we use different partners with separate reporting lines for the provision of this non-audit or non-assurance services? So not have Miss ABC work on this work, but perhaps somebody else within the firm who can lead on this work, so that there is separation, so that there is no impairment of objectivity and independence in the audit work. And when you start applying that safeguard, a lot of the self-review threat also gets managed, because again, it's not the same person who's preparing the work and reviewing it, it's a different person. So to an extent, the self-review threat gets mitigated as well by using different partners. And the last one is making sure that the audit committee has looked at the service and making sure that they have approved the services before we say yes and before we start work. And this is quite important because, again, going back to the principle of reasonable and informed third party, the audit committee sometimes is a very good proxy for that reasonable and informed third party. The audit committee will sometimes, if not always, have representation from the independent non-executives, and they are not involved in the day-to-day operations of the company, and therefore they can bring in that outside view, that objective challenge to various decisions that are being made by the company and by the audit committee. And therefore getting these services approved by the audit committee would be a very good, strong safeguard. If you change the nature of the client to a private audit client, some of the threats might, the nature of the threats might change. You will obviously not have an audit committee in that instance, but you may still want to think about going to the board and discussing it with them to say, we are your auditors and we are doing all of this new piece of work, and there is a perception of self-review and familiarity threat to independence. These are the safeguards that we are looking to put in place. We believe these are sufficient. Do you agree? Do you not agree? And the board might say, could you put another safeguard in? Could you make sure that this person is not involved, that person is involved? Or they might say, yeah, we agree with your conclusions, and that's fine. And either way, because we have taken another viewpoint into consideration from an overall governance point of view, from an overall independence risk management point of view, that is a very good story to tell, very good picture to paint. Moving on to the next case study. Now, this is probably closer home for a lot of the members who are listening on this call. So perhaps a private audit client where the proposed work is with regard to ERP implementation assistance, with regard to indirect taxation, then some international tax services thrown in, perhaps some transfer pricing as well. So a whole suite, a whole bouquet of tax services being offered to this private audit client. In addition, the audit partner's brother-in-law is the finance director at the client, and each year the finance director takes the audit partner and his wife, which is essentially his brother-in-law and his sister, to the IPL finals in a hospitality box on his company cost. Now, this is great. I'd like to be in that space, but from an independence point of view, there are questions to be asked. So what are those questions to be asked? Similar to the previous one, will the ERP implementation services include any kind of designing or implementation of financial information systems? Or is the work limited to providing just outside assistance and support and no design and no implementation activities involved? What are the amounts involved in the dispute with the tax authorities, and are they material to the client? Do the services involve any kind of calculation of tax values which may have a direct effect on the financial statements? Does Mr. XYZ, who's the audit partner, I think I should have named them, I haven't, Mr. XYZ, the audit partner, does their long association create any kind of familiarity threat? Does the audit partner's relationship create any familiarity threat? Are there any hospitality related matters that we need to bear in mind, especially with that very excessive company spend? The hospitality box, I know from memory, is quite expensive. So does that create any kind of self-interest or familiarity threat? Does that create a perception of undue influence? And what would a reasonable and informed third party think about this? So the last bullet point will always be common no matter what scenario you're considering. The third party's point of view is the most important thing. If I just go back to the previous slide, that's a longer sentence to say the same thing, which is, what is the cumulative assessment from a reasonable and informed third party's point of view? And we're talking what is the third party's point of view. So that is going to be a consistent piece in all your decisions, in all your assessments. What are your independent threats to consider in this story, in this case study? Definitely self-review, potentially advocacy, self-interest, and a lot of familiarity. So those are the threats that are manifesting given the whole facts and circumstances. How do we manage them? How do we put safeguards in place to make sure that we are able to accept this tax piece of work, which appears very lucrative? From a self-review point of view, you can perhaps put in different partners with separate reporting lines, again, similar to the previous case study, to provide the non-assurance services. Again, that separation would mean some level of self-review, some level of self-interest, and some level of familiarity threat to independence is reduced and mitigated. And the second one could be perhaps making sure that the management assigns the responsibility to a competent employee or a senior management, preferably, to make all the management decisions. So going back to the tax compliance example that I mentioned, if we pick up the phone and speak to a very junior, perhaps employee at the client and say, this is what I'm doing, are you happy with it? Given most members here are quite experienced and seasoned and quite respected in their professions, that junior employee might say, yes, sir, I agree, or yes, ma'am, I agree with whatever you are saying. This is absolutely right. No problems. And there is no process of a review or a challenge from their point of view, from the company's management point of view. But equally, if it was a more experienced person at the client, maybe a manager, senior manager, maybe the finance director, if he asked them, this is what I've done, we think your tax returns are not looking 100% accurate. We've made a few changes. Do you agree? They might say we agree, but they might also say, actually, you know what we did is the right thing. This is why we did what we did. Does that make sense? And the quality of that conversation, the quality of the review and the challenges that are posed by the client are a lot more robust, are a lot more effective. And therefore, having somebody who having somebody from the client side who has the responsibility to make all management decisions, especially if they're a senior management person or somebody who are experienced, that's a very good safeguard to have. From an advocacy point of view, quite interesting. So if there are advocacy elements, and if the matter that is being represented in front of the tax authorities or the tribunal is material to the financial statements, then it is likely to be prohibited as per the Code of Ethics, because it will have a material effect on the financial statements, and therefore could impair your objectivity to sign off on the balance sheet, or could be perceived as having impaired your objectivity and independence, and therefore that is prohibited. But if the amounts are not material, some of the threats that we talked about from a self-review point of view also mitigate the advocacy threats to independence. Coming to self-interest and familiarity threat, audit partner rotation is a very good example. So making sure that it's not Mr. XYZ who's doing the audit, somebody else comes in his place to perform the future audits will mitigate the self-interest and familiarity threat to independence to a certain extent. And then with regard to the hospitality, I think that one is a difficult one. I would, if the decision were left to me, I would perhaps just say no to that, because the perception that creates in the eyes of a reasonable and informed third party is that there is no way that a finance director who's paying for your hospitality box of an IPL, there is no way that you are challenging their judgments, their assumptions in an objective manner, in a skeptical manner, which is expected of you. So therefore, I would just turn it down. But if not turn it down, then maybe you say hospitality. Maybe it's not hospitality box. Maybe you go to the more general section, which is a lot cheaper, and that keeps them happy, but at the same time does not create a significant perception of undue influence. So that's kind of the second case study. I think that completes a study of what are the kind of different factors that could affect the independence threats. How can you generally think about safeguarding against those independence threats and reducing those threats to an acceptable level? Some things to think about that I want to leave with you at the back of this session is, in your firms, in your practices, what is the independence policy that you follow? Is it written down? And if your firm audits any public interest entities, does your policy sufficiently address the needs of a public interest entity audit as well? What is your firm's approach to managing independence risk, and who do you consult when there is a complex or a technical matter? Do you reach out to other partners within your firm? Do you reach out to other colleagues in other practices? Do you reach out to the institute? What is the approach, and have you documented that approach? Does everybody understand what that approach is? To what extent are your firm's partners and employees undergoing independence and ethics training? And when was the last time? Because that's quite important. I know as a practice, we are quite good at keeping up to date with all the different laws and regulations from a technical point of view. So any kind of GST laws, or for that matter, corporate tax laws, and any kind of new audit procedures, methodologies. We are quite good at staying up to date with those things. But is there a dedicated independence and ethics training that is offered to your partners, to your employees? If not, should you be having one? So just having a think about that. And to what extent have you invested in people, in systems, processes, methodologies to identify, to manage and document and to report independence risk matters? And is this consistent with the size and scale of your firms and your clients' operations? So if you're a very small firm of 2 partners and you don't have any large audits, then it's not necessary to have a sophisticated system to track all the different relationships, because you could decide that every month the 2 partners will sit across the table or speak on the phone and just get a sense of what's happening. But if you have, I don't know what the right number is, but I'm thinking if you have more than 20 partners in your firm, and if you have more than 3 office locations, then you perhaps need to start thinking about some kind of systems in place, some kind of processes in place to make sure that all relevant matters are captured centrally, they are looked at centrally and addressed centrally, just to make sure that even by mistake, even inadvertently, you're not falling foul of, you're not in non-compliance of the ICAI Code of Ethics. So that's a very high level overview. I know that there's a lot of there are a lot of questions that you might have, and unfortunately or fortunately, each individual case is a different assessment, and it all depends on your respective facts and circumstances. So I'll try to take some questions at this point in time and try and address some of them. But equally, if you have a very specific question and you're not willing to share it in the group, I've asked Chairman Sir to share my email ID and my phone number with all of you. Please feel free to reach out to me. There are some additional resources. I'll Chairman Sir, I don't know if the slides are going to be shared, but if they are, then you can click these links and read a bit.
Slides will be uploaded into our website.
Okay, brilliant. Thank you, Chairman Sir. So the case study. Yeah, go on.
Our actually in our website, any webinars will happen, the source will be uploaded in our website.
Okay, brilliant. Thank you so much, sir. Thank you so much, sir. So the PI public interest entity case study that I talked about is actually a real case study, and the NFRA have published an AQR report with regard to an audit, and you can click this link, go to that report, and have a read about the independence threats and safeguards, what the NFRA are saying about these kind of threats, yeah, and if you have any questions, feel free to email me or drop me a text. But I'm also willing to take some questions now. So Nikhil, will you be moderating the questions? Nitin, sorry.
No, I'll ask.
Okay. Yeah. Thank you so much. Thank you so much. I will stop sharing now.
Okay.
Yeah. Thank you so much.
I think we have not received any questions.
Now, few of the members have raised the questions, and 1 second, it is showing, sir, actually.
Okay.
No, correct. There is no questions as such.
No. They have raised Anand, C. Ramesh Kumar Jain, Anand Kalwa, Niranjan Prabhu sir. They have raised a hand to ask the questions. They can text here. Actually,
yeah. So there is a question from Mr. Kedia which says, if there is a conflict of interest from a professional angle versus issues of public interest, how the Code of Ethics will come into play to resolve such conflict in discharge of professional obligations with a CA or professional obligations or CA. Very, very interesting question. Thank you so much, CA Kedia. I think that is always going to be the challenge of how do you comply with the Code of Ethics versus how do you balance the public interest angle. Now, the public interest angle becomes very important when you're looking at large listed clients or when you're looking at large private clients which have a lot of shareholders, a lot of employees, and if they fail. So ILNFS, that is a very good example. I think we need to go back to the base principles of the fundamental principles and the conceptual framework, which look at integrity, objectivity, professional competence and due care, confidentiality, and make sure that you are complying with those fundamental principles. Just to give you an example, if you are looking at a fraudulent activity, and if you suspect any kind of fraudulent activity at your client, then the principle of confidentiality might say that you should not be disclosing that information externally without the consent of your client. But equally, it would be in the public interest to disclose that information to the authorities, to the relevant parties. So from a public interest entity audit point of view, from a listed entity point of view, there are requirements around reporting issues of non-compliance, and therefore under that principle you can report and you will still be complying with the fundamental principle of confidentiality. So it will depend on facts and circumstances, but you will always have to weigh the merits of ethics versus public interest.
Another question has cropped up. In case of a company having a huge exposure to bank finance has been, CPE is from Srikant Prasad.
Sure. Sorry, could you repeat the question, sir?
in case of a company having a huge exposure to bank finance
Yeah.
is seen as spy?
Having a cute, it could be. So you may want, so that's not defined in the code of ethics. So the code of ethics only defines listed listed entities as public interest entities, but you may in your practice, in your firm, decide that where a particular bank has a large exposure, you may want to choose that entity as a public interest entity, as a PI, and therefore you might want to follow slightly stronger rules around independence for that particular client.
Members, if you have any questions, please raise so that we can answer. One more question from Srikant Prasad. Can a company either subsidiary or associate to an listed be a PI? Can a company?
Yes. No, I got the question. I think yes, it can be, because it is possible that the subsidiary company is the one that is listed, and they have incorporated a holding company on top of the listed company. So it is possible in case of subsidiary listings that the subsidiary is a PI, but the parent company is not a PI. I think what is important to be mindful of is that if you have one public interest entity or one PI in the group, then it is perhaps appropriate to treat the entire group as a PI group as opposed to just that particular entity.
One more question is there from Chidambaram.
Sure.
Whether Twitter FB sharing or commenting looks like vested interested in the code of ethics if Twitter has product point of view.
Looks like vested interest. I will try to I'll try to answer this question to the best of my understanding. I think what we are saying is, if we share information on Facebook and Twitter about our clients and about our assurance clients, then how does that play out in the context of code of ethics? I hope that is the question. And I think we need to be mindful if we are, and that's a very good question if that is the question, because often what will happen is the client will have a new product or a new service offering, and they might reach out to you and say, could you share this in your network? And could you spread the word? And if we are sharing that information on Facebook and on Twitter, then that can be seen as promoting the interest of the client. That can be seen, and that is an advocacy threat to independence. That's a very good question. So you need to be very careful about doing those things.
Okay, thank you,
sir. Another question is, sir, I associate with another CA firm to audit the account of company.
Yeah.
One of the partners of the other CA firm is related to the director of the company. Does it violate the code of ethics?
Very difficult to answer. We will have to look at the nature of the relationship. We will also have to look at the systems that the firm as well as the company have in place to safeguard against these kind of issues. It is possible. It is definitely an issue that they should investigate and look into. Whether that is a violation of code of ethics or not, that would depend on the nature of the relationship, the involvement of the individuals in respect of the audit, and the controls and the governance procedures in place both within the firm as well as within the client.
You mean to say prima facie we cannot say that just being a CA related to a director, it's a violation of code of ethics, right? We need to take a judgment based case to case basis.
Case to case basis, exactly, because the relationship could be a distant cousin who does not live in the same house, and that might not cause a violation. But if it is your your sibling and you're living in a joint family within the same house, then that could be in violation of the code of ethics. So yeah, you're right, Srinivas sir. I think prima facie we'll need to just investigate that a little bit further.
What if he's a director is a close relative of the CA, but is an external director?
That will perhaps be in violation. That will most likely be in violation.
Okay. Is there any percentage of shareholding it matters, or just being a director, even not holding a single share, still
Yeah.
he'll be violating the code of ethics?
I think being a director would be a problem because as directors, they are identified as individuals who are charged with the governance of the company. So having shares is a slightly different matter. So you could be a shareholder and not a director. You could be director and not a shareholder, or you could be both. I think if you're a director and if you're a close relative of the auditor, that would be in violation of the code of ethics.
Thank you, sir. Thank you.
Yeah.
Thank
There is one.
you, sir. It was a wonderful session.
One more
Yeah.
question is there, Mr. Kore,
Yeah,
from Narayan Hegde.
1 second. Narayan Hegde has sent a question, sir. How to know the
Yeah.
conflict violation of code of ethics in case of a non-assurance engagement?
How to know the conflict or violation? I think that is again a very good question. Thank you so much for asking. I think that if you remember, one of the things that I mentioned was to what extent do you have monitoring procedures within your practice, within your firm? So there are only two ways, no matter how big the firm is. Even in my experience of working in big four firms, there are only two ways you can come to know about it. Either somebody tells you or you find out on your own. If somebody tells you, it is basically through self-reporting or through an external complaint or something like that. That's how you could find out. Or if you want to find it out yourself in terms of, are there any violations happening within the practice, etc., you will need to have certain monitoring procedures, which do some sort of a testing on a sampling basis every 6 months, every year. You pick a certain percentage of your engagements, you look at whether they have complied with the code of ethics or not, and that is another way to find out either compliance or non-compliance with the code of ethics.
We have one more very interesting question.
Sure,
What
sir,
is
fire
your
away.
view on writing articles on subject matters and posting them on social media forums like LinkedIn and Facebook, wherever? And
Yeah.
likewise, conducting a seminar online, not addressed to a client, but in general on taxation and other subject matters.
Yeah, again, a very interesting question. Thank you so much for asking. It is a question that I myself asked my bosses a few years back. I think the view is, I think the gentleman has answered the question slightly in their own question, which is if the topic of the message being posted on LinkedIn, Facebook, Twitter, if the topic of the seminar that they're conducting is not client specific, it is educational or it is informational, then that is generally okay. But if they are talking about a particular client matter, then the aspects of confidentiality need to be borne in mind. I remember an example where one of my, it's quite unfortunate, one of my colleagues actually did some very good work for one of their clients, and they wanted to talk about it on LinkedIn. So they went ahead and posted on LinkedIn saying, I worked for this client and I got great feedback. And they also attached the PPT that they had delivered to the client. And that PPT had some very confidential financial information. And everybody who was connected to them on LinkedIn could download that PPT, see that information. And that information was about a listed client. So share prices could be affected and things like that. And it was a very big issue for this person. He's a friend of mine, but unfortunately they had to be fired from the organization and things like that. So be very mindful of information that you're sharing on LinkedIn, on Twitter, Facebook, etc. If it's client specific, don't do it. If it is informational, educational, awareness, opinion, then that's fine. The other thing to bear in mind is reputational risk as well. So often, even in terms of educational point of view, if you are saying that a particular industry is not doing the right thing in your view, and you're posting about a particular industry, then especially in a negative way, then your client who belongs to that industry might say, why are you talking ill against my industry? And those kind of risks are also something that you need to be very careful about.
Now, what if I send a general article written on push mode, not on pull mode? Is it a violation of code of ethics?
What is push mode, pull mode? Can you explain that, sir?
I mean, push mode means I'm sending a general mail to all whoever in my contact, my client or friends.
Yeah. If it is informational, that's fine. I think that shouldn't be a problem. Of course, I think there are some other elements of code of ethics, not purely from an independence point of view, but from a ICAI member code of ethics point of view, which talks about, promoting your CA practice and things like that, which I am not very well versed with, to be very honest. But from an independence point of view, as long as you're limiting your content to educational and informational purposes, the independence threats are quite manageable. You don't have to worry about them.
Sir, one more question is there from Sneha Amarnath.
Sure.
What about joining network groups like BNI?
I think this question was also raised in one of your previous sessions. I remember I was watching one of your, and I'm going to leverage the answer from there. I think it is okay to join these kind of networks because as long as you're not talking about, you're not advertising your CA practice and you're not doing promotional activities, if it is purely to meet more people and share information, education, etc., I think that's fine.
Sir, I have one request.
Contradictory views around this.
Sorry, say that again, sir.
Contradictory views on this.
Okay. Well, I'll be happy to. I'll be happy to learn. What is the view, sir? I'll be happy to learn.
No, you are saying it may not be because sharing of. There will be no sharing of fee actually, but the pushing will be there.
Right. No, okay.
Recent development that joining, those are joined BNI also, they have to leave. They cannot join BNI. It is indirect promotional. Recent ruling has come, guidelines has come. We cannot join BNI. We cannot join BNI.
Okay. Thanks. Thank you so much, sir.
Thank you, sir. It was a wonderful session. Actually, earlier also we had it in this. Again, the coding is given independence threats and safeguards under ICAI Code of Ethics.
Yeah.
Now it is, I learned threats of independence, self-interest, self-review, advocacy threats, familiarity threats, and intimidation threats. So how to safeguard from this ICAI Code of Ethics? You have explained very well, sir.
Thank you so much.
Bottom of my heart, I wholeheartedly thank you for your time and taken. Even you are sitting in UK and Bangalore branch. For it is a proud moment to announce that person is addressing from our own person is going there and sitting in London and addressing our members. It's a nice one, sir. I wholeheartedly, on behalf of Bangalore branch members and on behalf of managing committee of Bangalore branch, I thank you, sir, for your wonderful time. Namaskara.
Thank you so much, sir.
Before proposing vote of thanks, there is tomorrow members. We have a session on new age digital accounting for chartered accounts. The link will be shared after 6 p.m. today, conclusion of this session. So kindly make note that the members registered and not log into the seminar will not get the CPE. The members has to register and he has to log in. Then only the CPE will be attendance will be taken care. It doesn't mean once you registered and keep quiet. And my sincere request, if you are not having planning to view the program, please don't register it because you are blocking the seat and not allowing other person who is interested to view the program. It is an artificial intelligence. Please don't use it here. So it will help for the members. There are many members interested to view the program. Since our 300 limit registration is closed, they are unable to register further. So kindly make note that my special thanks to Mr. Sairam Natarajan sir for spending time. I request our Bangalore branch secretary C.S. Srinivas to propose a formal vote of thanks to the speaker and our viewers.
Thank you so much, sir.
Thank you, Chairman. Sairam sir, I have one more question. What is your advice to youngsters, those who start practicing? Better to read Code of Ethics before starting practice or simultaneously doing practice? They want to read Code of Ethics. What do you think?
I feel that that it is not a one point in time activity. I think as you are preparing for your CA certification, you should definitely read the Code of Ethics and understand the principles. And when you're talking to your teachers, your firms, practices, you should definitely talk about those things, but also continue to read and engage with it when you start your own practice, irrespective of whether you're into assurance services or not. I think just understanding those five fundamental principles, the way I look at it, they just don't serve the CA practice. They also serve well in your life. I think if you follow those 5 principles, they can be very good mantras for your life as well. Just being honest, just being very free from bias and any kind of conflict of interest. So I look at it as a way of life. So I would strongly encourage that everybody tries to practice it, not just at work, but also outside as well.
Sir, here 2 members have commented again. The Shivakumar V sir is mentioned that ICAI banned joining the PNI.
That's true. That's true.
And again, Chidambaram Chikkaru has asked the question: can you have disclosure our relationship and come clean if I have doubt whether it affects ethics?
I think disclosure always helps, and self-reporting always has some benefits when the institute looks at these kind of matters or the regulator looks at these kind of matters. Again, it is very nuanced. So I don't know what the nature of the relationship is. At what point in time are you disclosing? Because if you're disclosing when an investigation is ongoing, that does not it is not that valuable. But if you self-disclose, if you do your own internal review and you disclose it at the back of that review, then that has more value and more weight. So I think it will depend on specific facts and circumstances. I would probably encourage what's his name, Mr. The gentle, yeah. So I will request him to reach out to me directly, and perhaps I can guide them on the details of the matter.
Okay, sir.
Nice, sir. Thank you.
Thank you, sir. We had a fantastic session. Really, we enjoyed, and we thank you on behalf of Bangalore branch of ICAI for sharing your valuable knowledge. And I also thank all the members and viewers for actively participating in this program. Thank you, one and all. We'll meet again tomorrow for a second session.
Thank you,
Thank you so much. Thank you so much, sir. Look forward to continuing to engage with you. Thank you so much.
Yes,
have a good day, everyone. Have a good day, everyone.